Go ahead, Morgan. Take it away.
Okay. Okay. First of all, welcome, ladies, to today's Zoom call. We are super happy that you're here and super excited because today is extra special. Michael Zuber is going to be talking to us today. And Mike, I just want to give a big thank you to you because I know, like you said, you're a busy man. You have a lot going on. I'm very grateful that you were able to make this time for us today.
Oh,
Um,
absolutely. Anytime. I'll always go where you need me, Morgan.
Thank you. And I know a lot of the women in this group know you, love you, respect you, probably follow you on either YouTube, Instagram, or both. And I know, like, for example, Michelle Abston actually got into real estate originally because of you. So I know you're already inspiring some of us here. So without further ado, I will turn the time over to you.
Awesome. Well, thank you very much, ladies, for the opportunity. I'm an open book. I've definitely come with some topics, but if you have questions ahead of time, just raise your hands or put them in the chat box. Anna or someone could watch the chat box, and I'll go wherever you want. I definitely have kind of three topics came prepared to riff on, and thus giving you some time to think about questions. Number one is talk to me about 2025. So 2025, I am convinced will go down is the year of the investor. What does that mean? Well, 2025, we are going to see the cycle low for real estate transactions. A few short years ago, we did roughly 6.5 million existing home sales, and I believe that we will do sub 4 million in 2025. That said, we'll still do, roughly 4 million, but it will be significantly less than before. The good thing about this particular recording, which is happening on the 15th of May, is, we're roughly speaking halfway through the year. And if you held on this far, right, you're a broker, you're an agent in mortgage, the year's almost over. And I have good news about 26 and 27 and 28 and 29 and 30, that each of the subsequent years will be better than the preceding year. So, for example, if we do 4 million in 25, we'll do 4.2 in 26, we'll do 4.35 in 27. So, you probably know, if you're in the business, you've lost a lot of competition. A lot of competition is left. They went out and became baristas at Starbucks and went to do other things because it's hard. But if you're starting now or you get through 2025, you are going to feast like a Vegas buffet because your competition is going to be gone and people will start transacting more and more. So I would tell you, you're almost there, right? If you're going through hell, as the country song says, keep going, right? You're almost out of this. Secondly, about 2025, I said this on Donald Trump's inauguration day. Buckle up, get ready. The first 6 months of after his inauguration is going to be wild and chaotic. I have no idea what he's going to do, but it's going to be bananas. Why did I say that, and why was I right? Well, he's coming in as a second term president, so he knows what he didn't know the first time. Second, this is his last go around, right? You can only be president twice. Third, he knows that he has the House and the Senate for 2 years. That is important. He can only do wild and crazy things until July 20th, because after July 20th, which is 6 months, he has to start worrying about the midterm elections. And if he loses the midterm, the House or the Senate or both, he's toast. He's a lame duck. He ain't going to get squat done. And that's not what he wants. So I believe a couple of things have happened about 2025. A, we have passed peak uncertainty. I highlighted peak uncertainty 2 weeks ago. I was kind of nervous about making that call, but I was right. And what we've seen the last 2 weeks is we're still in crazy times, but every day is less crazy than the day before. And again, it will be crazy up until around July 20th. But again, every day between now and really 2 months from now will be getting better and better. And then coming out of that, all you're going to hear is good things from the administration. You're going to hear tax cuts. You're going to hear deregulation. You're going to hear all of these pro-business things. You're going to get things like bonus depreciation back. You're going to get all of these investor-friendly things. So again, 2026 better than 2025. Now, when I talk about 2025 being the year of the investors, I hope all of you that are investors feel it to your bones. Because if you do, and you acknowledge the following, right? If you're an investor, what do you want? You want less competition. Congratulations. Demand has disappeared. Second, what do you want? You want more choices, more option, aka more supply. Guess what? Supply is up roughly 30% across the country, and some markets up 50, and all of that. So we get that. But what do we really want if we're honest with each other? We want motivated sellers because some listings are just wish pricing. And it's just a seller that says, hey, if I get this magical number that makes no sense, I will take it. We want motivated sellers. Well, guess what? As we are leaving the spring selling season, which is increasingly coming to close, it is going to become remarkably easy to find motivated sellers as they raise their hands. Now, motivated sellers come in all forms if you're ready for it. Some of them will just take a lower price. Great. Some of them will do terms. I just know of a buyer who had a 400 credit score, 417, I think, got a seller to take back 40% second, got a bank to lend him 50%, only had to put 10% down. That's the kind of creative financing that happens in a buyer's market. That would never happen in a seller's market. So again, I hope you have a buy box. More on that later. I hope you have daily discipline. I hope you are writing disrespectful offers. I hope you are following up because again, when you do disrespectful offers, it should never be accepted the first time. If it's accepted the first time, your offer's not disrespectful. You should be laughed at, cussed at, whatever the first time. But the beauty of this business is most of us only do 1 or 2 deals a year. So we just have to follow up and follow up and follow up. Of all the amazing deals I've ever done, I can't think of one I got with less than 3 or 4 follow ups. It's a process, it works. Just believe in yourself. The It is so easy to be in the top 10% as a real estate investor. You just have to be focused and disciplined. Don't be all over the place. Don't gamble. Don't do anything stupid. Know what you're doing. And just keep it's just like swinging a hammer, right? You just keep hitting that nail and it goes in a little bit by little bit. That's just what this game is. So that's what I have about 2025. I really think some amazing deals. I've actually talked about good and great deals. I think people are going to do deals of the decade and deals of a lifetime in the second half of 2025. Supplies up, demands down, motivated sellers go up. So be encouraged. Be thankful you get a buyer's market. Buyer's markets are rare. They don't last long. The average buyer's market, in my experience, which is nearly 30 years, is about a year to 16 months. We've been in this buyer's market arguably for 5 months. So best case, we got 7 months. Worst case, we got, 13 months. It won't last forever. So take advantage of this. So that's point number one, about 2025. Number three, I get asked about how to get wealthy. And the remarkable thing is, after talking to millionaires, deca millionaires, and a few hundred millionaires, the process to get wealthy is remarkably simple. It has nothing to do with your income. It has nothing to do with your upbringing. It has nothing to deal with childhood trauma or any of these other things. The way you get wealthy is step one. You must create disposable income. All right. What is that, smarty pants? Well, disposable income is okay. How much do you make? And how much does your life cost? Rent, mortgage, taxes, entertainment, cars, kids, whatever, right? Everything that you spend a month. And then at the end of that subtraction, there's a number. For some of you, it's $50. For some of you, it's $500. Once you know that number, and let's say it's $50 for this conversation, your sole job is to grow that number. Now, there's only 3 ways to grow that number, and we'll go through all 3 of them. Step one, you can whack expenses. This is what Olivia and I did, like with a machete, for 18 months. We were spending 100% of our income and had 0 disposable income. So I'm not talking to you as somebody that was, pure. I made all kinds of mistakes. However, after about 18 months of whacking expenses, we were now living on half our income. So the other half after taxes was now disposable. So that's one. You can whack expenses. That is the fastest way, but really doesn't move the needle a lot. But you can certainly see it immediately. Number 2, grow income, grow revenue. get a new job, get a second job, get promoted, get options, whatever it is, right? If you run a business, sell more stuff so you can grow income. And then step three is you do both. Now, for most people, I obviously recommend doing both. But if you're really in a bad spot today, and the answer is zero disposable income, you just got to look at your expenses, figure out what a want and a need is, and whack all wants. That's how Olivia and I got to 50%. Is Olivia and I didn't have any wants. We were raising our daughter, Teresa. She did get some wants because she's a kid and you want your kid to have a better life than you. But Olivia and I got no fun, no whipped cream, no cherries, no, sprinkles, nothing. But we still, we put food in the refrigerator and we paid our bills, but nothing. So that's step one of getting wealthy, disposable income. Figure out a way, understand it, and figure out a way to grow it. Number two, I do not know any millionaires or multimillionaires that didn't get that way with one vehicle. For me, it was Fresno real estate. For me, it was really Fresno Mayfair single family home real estate. That's where my buy box was in the beginning. You've got to become elite at something. I believe too many new investors are distracted by not knowing who they are, right? Are you a flipper? Are you a wholesaler? Are you a buy and hold? Are you out of state, in state? Are you ADU? Like, what are you, right? You should become elite at one thing. Um, Second, you've diversification, seven streams of income. All of that is for later in life. The fact is that getting wealthy is a season. It's a season of sacrifice. It's a season of hustle. It's a season of consistency. But if you do that and you're elite at one thing, and then you do step three, and step three is 10 years, you do it for a decade. I don't know anybody that's done that. It's not a millionaire and not wealthy. The wealth formula is remarkably simple. Create disposable income, which you can think of as seeds. Those seeds then get planted in your garden, right? Whatever you've chosen as your investment vehicle. And then over 10 years, those seeds turn into big old oak trees. It's just how this stupid thing works. Unfortunately, most people give up at year two or year three or year four, and those trees never grow. So that's the three-step wealth formula. And then the third and final thing I came prepared to talk about and ready to ask question is I have this thing called ORAT rules. I was asked one time at an event, what are the seven, or what are the rules for ORAT? And I came up with these seven. So here we go. Number one, focus. I believe in order to become elite for me in Fresno, California, which again, I never lived in, I didn't know anybody. I had to go there and ask around, like, where should I invest? Where should I invest? Where should I invest? And after asking 20, 30, 40 people, the thing that I heard in 2001 was the Mayfair District, 93703. So I said, great, I'll do that. But then that's still too big. Then I had to say, what do I know? Well, I know single family homes. Great, I'll do that. That means not duplexes, not quads, not apartments, not mobile homes, houses. Okay, what kind of house? Well, I don't want it too small or too big. Why? Because that's what I lived in. I didn't know any better. So I chose 3 or 4 bedroom houses, 2 baths, 2 car garage, single story, 1,200 to 2,000 square feet. That was my buy box. That's what I mean by focus. The beauty of step one and the beauty of a buy box is it frankly gives you and frankly demands that you ignore everything else. Most new investors are like, okay, Michael, I get the buy box, I get the thing, but I've got more time. I want to do more stuff. No, you haven't earned the right to do more. If you look in your buy box today and nothing changed, great, go do something else. But as days go by, your buy box will start talking to you. You'll start to identify bad deals, good deals, great deals. And until you can do that very, very quickly, which can take 90 days or 6 months, right? I've seen it both sides. You have no permission to do anything else. Because if you go too early, you'll be distracted. You'll be confused. Even in Fresno, you can't compare 93703 Mayfair with 9370 Fig Garden. They're like two different markets if you've never looked at them, right? The price points are different. The rents are different. The houses are, it's just different. So don't confuse yourself too early. I see so many people try to rush the process, and you can't. It's like learning a language, playing a sport. It just takes daily discipline. Get better, get 1% better every day, 20 minutes of practice. So that is step two, daily discipline. The whole beauty of anything I've ever done, and it's my unique superpower, is once I choose something, I can be focused like nobody else, right? I looked at my buy box, which I listed earlier, for almost 3 years. That's almost 1,000 days in a row. And usually I look twice a day. 1,000 days in a row before I looked at anything else in Fresno, California, which means I ignored 99.5% of the market for 3 years. That's what I mean by focus. And that's what I mean by daily discipline. It's only 20 minutes a day. And when you're done, you're done. You move on, you go do something else. Number three, and this is why networks like this are amazing. This is why working with Michelle Morgan and all the other great ladies on this is vital. I challenge you, I almost demand that you find two new people to talk with every week. You should try to grow your network by two people a week. Because if you can grow by two people a week, that's 100 people a year. Think about that. You do that for 5 years, that's 500 people. And the beauty about real estate investing, which I did not know the first 5 years, is this is a people business, right? The spreadsheet, the math is almost secondary. People, relationships are going to be deal flow. They're going to help you with problems. They're going to do favors for you. You're going to do favors for them. Real estate investing, groups like this are vital. You can second check, double check, get motivation, share your sob stories. Doing real estate investing alone is stupid. So I'm glad you're all here. It's just the right way to do it. Find your tribe and just be all in. Invest in the tribe. Show up to events like this. Contribute. Ask Steve if you can help. You'll just, the goodness will come back tenfold. And number four, the power of a buy box is actually what it teaches you. It actually teaches you what an average deal is. You know, once you look at a buy box for a while, you'll do the math and you'll go, hey, my average buy box is 3%. It's -5. It's 7, whatever it is, whatever the math says it is. Once you can do that and articulate it to somebody like Morgan, and Morgan goes, yep, you got it. You're all good. I never want you to do an average deal. I want you to do a good, great deal of the decade or deal of a lifetime. Anybody can do an average deal. And if you are going to do the ORAT, focus daily discipline, you're not average. So never, ever accept average. Would you accept average from your kids, your relationships? No, of course not. So don't accept average real estate deals. If you're writing up an offer on a price, like let's say there's a listing and you're like, hey, this is an average deal. Great. Guess what? You're not going to write a list price offer. You're going to find a way, lower price point, owner carry, whatever it is, and you're going to make it a good or great deal. Number five, and we've all lived life, so we know this, but it had to be on the list. Bad things happen. Bad things happen. And you just got to learn that bad things happen. The key of bad things happening is you have to learn what it's trying to teach you. Did you do the repair? Did you pay the contractor too much up front? Did you, property manager steal from you? Like, learn the lesson. The most expensive lesson is the one you've got to be taught twice. So again, bad things will happen. It's not all sunshine and rainbows. You're dealing with the public, right? Tenants are public, buyers are public, and some people out there are just crazy. So bad things will happen. Number six, as I said in the Get Wealthy formula, it's a 10-year commitment, right? If you're going to sign up for this and you're going to be committed to this season of life, know that the season is 10 years. But, I now interview 10, 12 millionaires on my channel. Most of them are financially free and not working. Most of us got 20, 30, 40 years of financial freedom because we chose a season of sacrifice, a season of investing. So sometimes you find yourself going, hey, is it worth it? I talk to people every day, post content every day that says, yes, it's worth it. And then the final one, and this is a big one, especially in a world that's full of doom and fear and just all of this craziness, is you got to audit your network. Now, what I mean by audit your network is not only the people that you have in your life, like the folks on this phone call, but also if I pulled up your IG feed, or your YouTube feed? Would I just see a bunch of doom porn, or would I see, you know, real talk, like what's really going on? Would it be a positive? Would it fill your cup? If you think of your mind like a glass of clean water, would you put a spoonful of oil, like motor oil, in it? Watching one stupid idiot who produces fear porn for a living is that spoonful of motor oil. Just one spoonful can destroy a gallon of water. What are you doing? Protect yourself. Your mind is worth it. You just need to be around positive people going the right direction. And as I said in rule number 5, bad things happen. There is something different between saying, "Hey, I have to evict a tenant. Hey, I had a water heater go out. Hey, I have a leaky pipe," than just producing fear. And hopefully by then you can tell the difference between fear and doom. So again, those are the 3 things I had: 2025, the market where we are, the 3 steps to getting wealthy, and the 7 ORAT rules. I'll happily take questions or go anywhere you want from here, Morgan.
Thank you so much, Mike. Holy cow. Um, does anyone have, well, let's go to the chat real quick. I did see one question in here, so we'll start there. Teresa says, I can't get the bank to loan me anything if I'm in between jobs, but I have disposable income and I want to use it wisely. What are other options? What are other options without going through a bank loan or mortgage loan company? I'll let you
Well,
handle that.
yeah, you can go to a DSCR lender. I speak to DSC lenders all the time that will do those loans. Now, obviously, they're going to do a little bit higher down payment, a little bit higher interest rate, but they will get you in the game. The second one is you can articulate the deal you're doing and look for private money. The private money could come in 2 forms, could be debt or equity. I prefer debt. I don't like having partners, but that's not for everybody. Some people like partners. Frankly, I didn't get a bank loan for 12 years, right? So, I mean, getting a bank loan is a relatively new thing, right? I started in 2001, and from 2006 to 2018, I didn't get a bank loan because no bank would lend to me. And I had millions of dollars in equity, 800 credit score, and had a job. They still wouldn't lend to me. So the fact that banks don't lend to me is not a big deal. I have DSCR lenders that will do with deals in the 6s and 7s. So, just open your mind to DSCR lenders.
And you ladies, if you have any questions, you can unmute yourselves and just start talking, or if you want to put it into the chat, that's totally fine too. I do have a couple of questions that came up from me, Mike. What made you choose Fresno? You've probably answered this before, but I would love for you to talk on that again.
Yeah, so I mean, the first answer is Olivia, right? Which I wish she was on this phone call so she could answer it. So the first answer is I spent a year. Again, I told you earlier I'm broken. It's my superpower, but it's also a weakness. I looked for 52 Sundays in a row, every Sunday for 52 weeks in the Bay Area, Palo Alto, Sunnyvale, Cupertino, Morgan Hill, all over. And I couldn't find anything that cash flows. And Olivia, being way smarter than me, sat down on week 53 and said, "We're not doing this anymore. We have to do something different." And the next question was, do we go out of state or out of area? I don't like to fly. So we pulled out a California map and we just started drawing circles. What's a half hour away? What's an hour away? What's an hour and a half away? What's 2 hours away? And then finally, Fresno came into view at 2.5 hours. I didn't want a small town, right? There are some markets where there's 20, 25,000 people that might have been okay, but I wanted a big market. And Fresno, even back then, was almost 500,000 people. So the reason we chose Fresno was I wasted a year. I should have only wasted 6 months, but I did waste that extra 6 because I'm broken. But Fresno was the first market that made sense. It met the 1% rule at the time. I bought Norris Drive for 107. It rented for 1100, and we could drive there versus fly there. It's a real easy drive, right? 101 to the 152 to 99. It's a quick, easy drive, but still 2.5 hours. 2.5 hours one way. I must have done that drive 50 times to see one house. Think about that. You drive for 2.5 hours, you spend 5 to 10 minutes looking at a house, and you drive back. I did that 50 times. That's how committed we were. So that's why Fresno. It was the only market that made sense near me.
Yeah, that does make sense. I love it. Thank you for answering that.
Mhm.
Ladies,
I
take
have a
advantage
question.
of any questions. Yeah, Michelle, go.
So for seller finance offered, if the terms are good, like 10 years plus, do you offer more?
Well, I come in with the numbers that make sense to me, but yes, there are a couple of things that I pay more for. One is a longer term. I would pay more for 10 years than 5 years, right? The balloon. I would pay more for lower rates. I tell you guys or I've told people about the story of a house on, God, what house was that? I own a few of them, so I don't remember. Oh, I don't remember what the street name was. But anyways, he sold me a house for 130 that was worth 100. Why did I pay 130 or 125, whatever it was? It's because he offered me 30-year fixed rate debt at 0%.
Wow.
I'll pay for that. Sure.
Yeah.
Incredible.
Right. So, he tells me, like, I spoke to him like 5 years after we did that deal. And he told me on the phone, he's like, dude, I tell my golfing buddies about you all the time. I'm like, really? Why do you talk about me? He's like, well, I tell them about this, about how I scammed this Silicon Valley guy out of 25 grand by making him overpay. And I'm like, that's convenient. You don't tell them about the 30-year money at 0%. I see. He goes, no, that's not important. They don't need to hear that. I'm like, okay, right, you have fun with that. You feel like the big shot, but I
Yeah.
think I got the better deal on that one. Yeah. I mean, so yeah, I'll pay more for lower debt and longer balloon for sure, Michelle.
Okay. Thank you.
Good question, Michelle. I'm going back to the chat, Zuber. So Perla says, if I heard correctly, how did you stay motivated when you looked for almost 3 years before making a move? That's a good question.
Yeah. So just to be very clear on that, when I say so, we bought 4 houses in 3 years. So we were making moves. I probably wrote 100 offers. I never went back and checked, but I bet you it's really close to 100 offers in 3 years. So again, we got Norris Drive relatively quickly, and then Simpson and Michigan and these other ones. Um, but I just I just couldn't. I was like, this is all I know. Right? Fresno's massive if you're an outsider, and they're all different areas. So I just knew that I had a competitive advantage after the first year in the Mayfair district, and I could find it. And how did I stay motivated? Again, one of my broken features is I saw every offer, every no, every decline as a positive. It's one step closer to yes. I happen to have a sales career for 30 years. I happened to cold call for the first year of my sales career where you made 100 dials a day and you got hung up on most of the time and yelled at the other times. So I'm just used to doing the work and turning a no into a positive. It's like, yep, one step closer to a deal, one step closer to a deal. And after you get a deal like Norris Drive, you have proof of concept, so you know it works. So, I and lastly, this is really weird. My big goal was 4 properties. Like one of the things Morgan, Jason Pritchard, the other elites in Fresno have is they can almost see this future in Technicolor. I'm not one of those people, right? I don't have these big goals that are so clear that I can articulate and you believe them. I'm like, dude, I'm just going to get to 4. I'm going to work forever. I'm going to retire after 65 or 67. But my retirement will be better because of these 4 rentals. That was my big, crazy goal. And obviously, we went on to do nearly 200 units, but I, I, I could never envision any more than 4. I mean, that was my big, scary goal. It's like, honey, we're going to do 4. What do you mean we're going to do 4? We've only got 1. I don't know. I just live in the mud, and I'm okay with that.
And Mike, when you said you accumulated 3 or 4 properties over the course of those first 3 years, was it like one per year, or did you get them all real close together? How did that?
Oh God, if I remember correctly, we got Norris Drive after about 6 weeks of looking. Then we didn't get the next one for like 9 months, and then the next one for almost a year. Because again, I wrote 100 offers,
Mhm.
and I try to get great deals everywhere I go. So no, it was. I mean, there was yeah, there was at least 9 months between each transaction because I didn't want an average deal. Anybody can buy an average deal. Go on the LMS, write an offer, get a deal. That's not what I wanted. I wanted something below market that would have a positive return. The reason that Norris Drive was better is because they had this big family room, which I converted to a bedroom, which allowed me to get more rent, right? These value add opportunities. So, yeah, no, it was definitely spaced out, at least
Yeah.
8 or 9 months between.
So pretty significant gaps in between certain deals, which,
But I was making offers almost weekly. That's what I
right.
want people to realize. I
Yes.
never gave up.
Yeah. Going back to your 7 rules, you stayed completely focused and you were consistent and so
Broken.
on.
Yes.
Yeah.
Broken.
Perfect. You're funny. Okay, next one in the chat. Let's see here. Teresa says, do you suggest if this is your first investment to start small and build?
Yeah, you want to do something that A is still a proof of concept and B won't bust you out if you don't like it. Because again, real estate investing is not for everyone. It attracts a lot of people because it makes millionaires. But I'm not confused. You know, for some people it just doesn't click. You don't like the stress. You don't like people living in your property. It's if it's not for you, yeah, I don't mind getting growing, starting small. Even Grant Cardone, who I've talked to, started with 2 houses. I mean, he likes to talk big and now, like, don't if you buy anything less than 100 units, you're a loser. I'm like, hey, dude, you started with a house too, so shut up.
Yeah,
So
right.
I think starting at a level you're comfortable with, and it won't bust you out is not a bad idea. Get that proof of concept, get that win. It's really important that first one's a win. So yeah, I think that's wise advice.
Awesome. One more actually from Teresa as well. This is interesting. She says, I'm in healthcare. I'm in the healthcare industry, and I love how people can, whoops, hold on. I lost my spot. Okay, I'm in healthcare industry and I love people. How can I make income investment, then turn it around to help someone else's vision in building a church plant without doing a 501(c)(3)? I have no answer for that. Hopefully you know
Well, I
something.
mean, again, it's just depending on what you would like to do, right? So again, you know, in order to help people, you have to be able to produce value, and value is often measured in this game as either income or assets. So one of the things you could like I so one of the things I've recommended to parents is when you get it like when your child is born, buy them a rental property. Now don't buy it to them like put it in their name, but like, hey, this one's for you at 18. Because if you set it up right and you do the mortgage payment out, you could theoretically give them a free and clear property in 18 years. So if I wanted to, you know, help a church or build a school or something, I would allocate or identify a property and say, hey, this one, when it matures, whether that's 3 years, 5 years, 7 years, it's going to be the thing that I then give the equity to that organization. And obviously, you would do that through some donation. I would make sure it's tax efficient and the like. But anytime you have these big monetary goals, um, I would just attach a unit to it. Like a lot of people attach units to, hey, this is the one that's paying my electricity. This is the one that pays my automobile. But there's no reason you can't say, hey, I want to, you know, I want to fund a church for a year in El Salvador, and that's going to cost 10 grand. Well, great. Find a flip, do this, do that. That'll produce the 10 grand, and then, you know, check it off the list.
Another question. As after you hit that, 4 property goal, how did those goals change over the years for you guys of what you were wanting to achieve?
At that point, I was a deal junkie. And the other thing, again, just to be very clear, I was very lucky that my wife, Olivia, was on board from day one. The other thing we did right is we divided labor. So my job was to find deals and secure capital. Her job was to run the portfolio and manage the cash flow and the business of the portfolio. So she frankly had the harder job, the more detailed job. But at that point, we just became deal junkies. We just kept going. And the thing that should be said here is I got to 8 houses, and that's when 2006 was here. And if you guys don't know about 2006, that was a very important year. I went to an event much like this except it was in person with a guy named Bruce Norris. Bruce Norris had this report called California Crash. As somebody who had lost a lot of money in the stock market, I'm talking 80%, that hurts. I was not up to losing money in my 8 rent because at that time in Fresno, I was a millionaire. But if I lost 80% of it in the California crash, I was not up for that. So what happened because I went to an event like this and I kept networking is I realized that Fresno, California houses were overinflated. And you can look this up on Zillow if you wanted. 1818 Norris Drive East 93703. Look it up. I bought it for 107 and 3 years later I sold it for 267. More than doubled. But what I did is I took all that money and moved it into apartment buildings. So in 2006, because I went to one event and I then did my due diligence, I sold, AKA exchanged, all my houses. Over the course of about 9 months, we went from 8 houses to 80 units, all with 1031 exchange. And that is one of the things that exploded our wealth, our cash flow. And frankly, we were unscathed by the Great Recession because we were not in houses, right? That house, Norris Drive, if you look it up, the person that bought it for me, I think paid 263 or 267 or whatever it was. It was foreclosed and sold for 75 grand the next time. It took 15 years for it to get back to the price that I sold it at 263. So you've got to be watching the market. If I was stuck in those 8 homes, I'd still be working. I wouldn't be talking to you today. But because I went to an event, because I checked the data, because I took action, you know, the party was over. We suddenly had 80 units, and we were buying hand over fist during the Great Recession because we were not hurt. We had tons of cash flow, tons of equity.
Amazing.
I have a question.
Hi.
Hi. Um, my question, you mentioned earlier that you were using the 1% rule. Are you still using that rule when you buy
No, I hate
right
that rule
now?
now. But no, I
Okay.
hate it. I hate that rule. I think it promotes being lazy. It's one of those rules that sound good, sound smart, sound sexy, but actually causes a lot of danger. It actually often drives people to the worst parts of town. It often has you avoiding HOAs and all these other things that are kind of hidden expenses. So no, I rail against the 1% rule every chance I get, but it's where I started. I didn't know any better. But yes, I have not used the 1% rule in probably 20 years. What I do now and what I call good, great, average is just yield. Like, and it's a really simple formula. It's the bottom number, which is called the denominator. How much cash am I putting into the deal? And typically there's only three things it could be: down payment, closing cost, and make ready. What does it cost for me to make this rent ready? That's the denominator. That could be 10 grand, it could be 100 grand. And then the numerator is your expected monthly cash flow for a year. You simply do that formula, it produces a decimal, which you can convert to a percentage. So I only use yield. I've only used yield for 20 years. I want to know essentially how much money comes out of my account and how many babies am I getting? And that's what the yield is. I want to know how hard my money is working. That's what I use today.
And is there a certain yield amount that you're looking for that says, yes, this is a deal?
Yeah, so every buy box will have an average yield. So let's say your average yield is 5. A good deal would be 7, and a great deal would be 9. So it's always a couple of points above average. Now, the big question is what happens if my average is 0? Let's say you're investing in a market and your average yield is 0. Michael, then a good deal is 2 and a great deal is 4. What should I do? Well, you should probably just keep your money in a savings account making 5%, right? It's just the reality of the world we're in. So again, I'm not telling people to invest. I'm not telling anybody to buy a bad deal. I'm not telling anybody to buy, like, never buy negative cash flow. I call it alligators, right? Never have a property produce negative cash flow. I've done it. Don't do it. It doesn't feel good every month. But that's how you figure it out. Is once you do the math, once you have a buy box, once you figure average, good and great are a couple of points higher than that.
Yeah, that was helpful.
Sure.
That was good question, Lilith. One more in the chat, Mike. Says, I think this is from Lindsay. She says, when you were making offers every week, were all of those offers on market properties listed in the MLS?
Yeah, dude, I started so long ago. I didn't start talking off market until 2018. So for 15 years, 16, 15, yeah, whatever. Everything was on the MLS. Up until 2018, I got everything on the MLS except 2 properties. One was directly from a bank who cold called me because I own the property next door. And the second one was on auction.com. Other than those 2, until 2018, everything was MLS based.
That's incredible. And so how many rentals, I'm curious, do you know off the top of your head, how many did you purchase off of the MLS up until that time?
Well, I mean,
Roughly.
like, are we talking doors or transactions? Because those are different numbers.
That's true. We'll just do transactions.
I would say before I did my first off-market deal, we would have closed, meaning bought, 43 transactions, somewhere between 40 and 45 transactions before we went off market. Dude, Morgan, I didn't even know it was a thing.
I know, off market.
That's
Like,
crazy.
what? Direct to seller? Say what?
What?
Yeah. Yeah, no, that's wild. That's crazy. And that's a really beautiful example of like what's possible. Because a lot of people believe, oh, there's no money to be made on the MLS. There's no deals on the MLS. I have to do direct to seller. I have to do it this way. And you don't. You have
Oh,
options.
I'll remind you again, that, like I would tell you today, because it's a buyer's market, if you're focused and disciplined, there are plenty of value on the MLS today. There are motivated sellers out there that haven't had a showing in 30 days. It's now day 97. The real estate agent's getting nervous because they're going to get a cancellation or lose their listing, and they've already spent $5,000 on marketing. There's plenty of value. The problem is for 2 years, we got like you had to pay over list price. That's not the market we're in now. We got to throw that history away and just be willing to write disrespectful offers. Like so the next question should be is, okay, what's a disrespectful offer, smarty pants? I don't think I would write an offer today, like my first offer, that's not 25% below list price. I'm not expecting to get it. I'm expecting to learn something. Right? That's the problem, right? People that are writing disrespectful offers and they're telling me they're 5% below asking or 7%, I laugh at them. I mean, what are you doing? That might be where you end up, but that's not where you start.
Yeah. I love it. That's so good. Michelle, your hand raised. Go ahead.
Well, first of all, I just want to say, can you guys hear me? Okay, I'm with my AirPods. So just want to say thank you, Michael, for coming on here and sharing your information. Your energy is like my blood is like, "Wah!" So thank you. Thank you to Anna and Morgan for facilitating this. But Michael, I have a situation where I have put in an offer for a house. It's been sitting for 6 months. The realtor isn't from the area. It was priced way too high. It actually went pending, but something went wrong. So it fell out of pending. It went from a ridiculously high price. I know it just needs 30 grand to fix it. And I did reach out to Jason and was like, offer that ridiculous offer, which I did. And I got like nowhere. This agent isn't working with me. And I know it's all relationship. How can I like is there anything I can do to try to like I want to go beyond. I know I can't go past the agent, but I want to and just go directly to the seller.
Yeah. So the key to these deals is you need lots of these to keep going. It's really tough when you only have one like precious egg that you're carrying. But the money is made in this business in follow-up. It doesn't shock me, Michelle, that their first response to your lowball offer is go away, basically. But that is it's like when you hear that, you hear the downside. What I hear is great. I need to call you in a week. Right? Call them back. Right? I mean this. None of my deals of the decade or deals of the year were done with less than 3 follow-ups. Some of them were 7, 8, 9. The money is in the follow-up. You write this first crazy disrespectful offer, they're supposed to say no. Sometimes they say it nicely. Sometimes they don't say it nicely. All of that is just great. I'll call you back in a week. Great. I'll call you back in a week. Great. Because here's the deal, Michelle. Only one of 3 things are going to happen. 1, they'll sell it to someone else. 2, they will take it off the market. Or 3, they will start dealing with you. Those are the only 3 things that can happen. So keep writing offers. It's okay. Get another one. Get another one. Get another one. Keep going.
Okay. So I've done the calls and I've been like totally ignored. So you're just saying just submit another offer.
Amen.
And just keep texting. And maybe for Mother's Day, I should have said, hope you have a happy Mother's Day. And I didn't do that.
No, it doesn't. I mean, that's like professional stuff like Morgan and Jason do. I would never do that. You know, and again, these are just things I would do. So like, I don't know what your offer is, but sometimes I'm a dick. Like if you're a dick to me, I'm going to be a dick to you. So my next offer would be $1,000 less. And my third offer would be $1,000 less. I would just like, hey, you don't want to deal with me, shithead? I'm going to write this the other way.
Wow. Okay.
Good question, Michelle.
yeah, have a piggyback from that. Because I know, you'll still say no to the offer. But how do you deal with an agent that is not fully wanting to work with you in those type of transactions?
Well, that's the beauty of working with somebody that's long in the tooth, because you just have to have a conversation with the agent. They probably have a 6-month listing agreement. And if they're month 4 of that, they've had expenses going out. They know they've had no showings. And you just call them up and say, hey, you and I both know it's 121 days on market. You and I both know you're not holding open houses anymore. I think there's a deal here. And just talk to them. Right. And again, if they don't want to do it, it's okay. They'll lose the listing and somebody else will get it. There was one of my best deals was an 18-unit apartment building that I tracked through 2 years and 4 agents.
Oh, wow.
Wow.
So it's okay. Just use, because again, a lot of agents like let's say it's 4 months into a 6-month. Just call them up going, hey, I know my offer's low, but hear me out. This is why it's this price. I have comps, I have this, I have that. Right? Educate them. Second, how long's your listing agreement? Right? Did you get a 6-month agreement? It's coming. Let's work on something. Worst case, work with me to get your listing extended. Right? Because sometimes if you show that there's offers and activity, maybe the agent can get an extension. Make yourself an asset to the agent, especially late in the listing cycle. This doesn't work. Like if you're doing what I'm talking about on the first 5 days or 7 days, you're being a fool. That's not where you do this. You do this at day 78, 86, 94, right? Just know that this thing I'm talking about is for the aged and old inventory.
Yes, and like
Yeah.
just for this idea, this scenario, I didn't reach out or get involved until it was already sitting there for it was 4 months.
Perfect.
So,
Fully
but
awesome. Nice work.
yeah, and I'm gonna call today, and I'm gonna put an offer today.
Yeah, make it $1,000 less than last time so it catches his attention.
Okay.
Good job.
These are all really good questions, ladies. And I know, Mike, you've got to be on by you've got to be off by 12:59 on the dot. So we want to make sure we use this time wisely. We've got a few minutes left. If you guys have any more questions, put them in the chat real quick or raise your hand. Perla just
We
said,
have one more. Yeah.
yeah. Okay. Perla says, are you focusing on SFR or multifamily units right now?
I go where the best deals are, at least in Fresno, California, and in Henderson, Nevada, my 2 markets. Right now, single family homes are better. I do think that multifamily will crack next year or the year after. I think Ken McElroy is right. And I might do, like, if you guys haven't read my first book, One Rental at a Time, I might repeat what I did in there when we sell all our houses in buy multis in 26 and 27. We went from 8 to 80, and I own a lot more than 8 today. So it could be a lot of fun. But yeah, right now it's residential because I can get 30-year fixed rate debt. We can add ADUs. We can do these other things to add value. But that's not to say I'm not opposed to multifamily. It's just multifamily is still, it's the market's locked up. It's frozen. Unless you're trading in class A plus, the market's not moving. So I'll wait for the pain to come to multifamily.
Yeah.
Michael, I know that your market is mostly here in Fresno and you're starting to venture in Nevada. When did you decide to, was it when you moved to Nevada that's when you decided to look off, or have you looked at any other markets besides Fresno?
Oh yeah, I've looked. I mean, so in 2006, I went to Texas, Colorado, Arizona, New Mexico, probably a couple other places because I was convinced that California was, crazy and going to go wide, just didn't want to put my money there. And what came back to me is I couldn't build the team again, right? The team, because again, I work all over the world. I traveled 3 times a week. To me, the team is everything. So while we flirted with other markets and going out of state, once we had our team locked in, which again, we've had locked in for almost 15 years, I just can't move. So Fresno will always be the heart of our portfolio. I may dabble in Henderson because we live here and I get bored really easy. So I might try to buy a few just to not be bored.
Just going back to the stat, Mike. Teresa said, love your spirit, humility, and enthusiasm. Thank you. Thank you for all of your encouragement. I think we all feel that way. You've been amazing, Mike.
I appreciate that.
Yeah.
And then I think Lindsay has one more question here. She says, if you need an agent, oh no, it's just a comment. If you need an agent to sell those 80 units in tax deferred exchange in 2026, we're here for you.
There you go. I appreciate
I
that.
think we all
appreciate
are.
We all are.
Yeah,
Take your
exactly.
pick.
Smart.
Yeah.
Smart. Very cool. And Morgan, I
Something
appreciate
wanna-
the opportunity. Yeah, go ahead.
Yeah, no, Mike, this has been amazing. And I knew it would be. You have so much knowledge. You provide so much value everywhere you go. And we just truly, truly are so appreciative to you. And something I want to comment on is like just listening to you talk, I wrote down multiple like one-liners that you've said. And I hope that you guys took note of this as well, or at least noticed it. He said things like, it's easy to be in the top 10 investors. The process to getting wealthy is actually very simple. I take every no as a redirection to a yes or something positive. Like those are not just statements he's saying, that is his mindset. Like those are belief systems that he has intentionally developed and worked on over the last 20 years of his life and career. Would you agree with that, Mike?
Oh, absolutely.
How much
it's really
of a part
what's made it successful.
Yes, how much of a part has that played in your success? Being willing to
it's everything. Those three things that you listed are everything. If I don't have those, I don't think, because again, if you guys don't know my story, that first property on Norris Drive would have killed most people. Right? We go in, we get a tenant, we do everything right, they screw us for 20 grand. Most people give up. But because we had the right mindset and we were willing to try again, we kept going, and now we're, frankly wealthy. So, I think real estate tests you. Bad things happen. It's rule number 5 for a reason. Learn the lesson, move on, keep going.
Yeah, I love that.
Yeah, very helpful. All very true.
Pearl also says, loved your book and thank you for everything that you do.
Yeah, don't forget I got a second book with Jason Pritchard in it. 15 Conversations with Real Estate Millionaires. Jason
Oh, yes,
and Jen
that's
Pritchard
right.
are in that book. Yeah.
Can you get that anywhere? Like Amazon, anywhere?
Amazon Audible. Yep, it's there.
Awesome. Perfect.
Did you narrate it yourself?
No, I had a buddy of mine do it because I don't read well. I really don't read well. So I had a buddy narrate it. If you guys know who Dion is, Dion Talk Financial Freedom, he read it for me. He read both books, actually.
Cool.
Oh, nice.
Cynthia says, will we be getting the recording today?
Yes.
Yes, absolutely.
Yes, absolutely.
Good.
All righty, you guys. Any other questions? Mike has 2 more minutes. Otherwise, we'll go ahead and wrap up.
Just thank you
Thank
again.
you so much. This was awesome.
Thank you.
Anytime, Morgan, reach out. I'll be here.
Thank you so much, Mike. We appreciate it. We'll send you the recording shortly. And thank you for being here, ladies. You all have a fantastic day. And I hope you come back again, Mike. If you would be willing to do this again sometime, we'd love to have you.
Ask anytime, Morgan. Later.
Thank you
All
so
right,
much.
thank you.
Okay. Have a
Thank
good one.
you. Bye.